Hello, simple traders. Welcome again to another session of our technical analysis. I am Deka the Great, your instructor, your friend, and also your signal provider in the Simple Trades group, signal group. Today we are still going to look at some charts, and we are going to discuss more on point of interest, that is POI. But then I think let's a bit discuss this thing in pidgin so that maybe other people too can follow. I've been getting a lot of requests to see how I can make this thing very simple. So today we are going to be talking about point of interest, and I am going to be teaching in pidgin. I will try. So waiting be point of interest. Waiting be point of interest. If you look at my chart now, you will see that I have BTC. Now BTC, now you see so for my chart. Now BTC. So these are the movement of sorry. Now this pattern and like this now, this movement, now you see Bitcoin done the move for the past weeks and months. So waiting be point of interest. If you look at your chart, you go see some movement where sometimes if you do not know how to do, if you know sabi do naked trading, you no go really understand wetin dey happen for this chart and where you go put your entry. So people will always tell you say to analyze chart is hard. No, it's not hard. It's not hard. I am here to make this thing very simple for you. That is why we have simple trade. Our aim and objective is to simplify everything wey people do make trading dey complex. Now wetin we dey here dey do. So now why I dey here today, I wan talk to you about point of interest and how you can point out your point of interest. So first, make we define am. Wetin be point of interest? Wetin be point of interest? Point of interest is that area on your chart, is that zone or that point where you are expecting, say, the price go get a certain reaction once the price move into that area. That very area on your chart where you feel say if price waka enter inside, or if people dey buy or sell, buy and sell, then the candlesticks come waka enter inside that pattern. Now there where you dey expect a certain reaction. Now wetin we refer to as point of interest. So point of interest basically is the area or the zone on your chart where you are expecting a reaction once price place or move into that zone or region. So now where we don't explain wetin be point of interest. Now there are different things people use as point of interest. People where they do smart money concept, they use order block. Some people use order block or OB. People where they do smart money concept, they use order block as point of interest. People also use fair value gap to mark out point of interest. They also use order block to mark out point of interest. They also use swing highs and swing lows as point of interest. People also use highs and lows as point of interest. So now, upon all these things, and also people also use liquidity. People also use liquidity to mark out point of interest. Now, make we no come dey confuse ourselves, because we don't know wetin be point of interest to you. Which of these things now you think say e dey very easy for you to spot out on the chart? Which of these things now you feel say if you just look at your chart like this now, you go easily You go easily point out those things on your chart. So if you want to use candlestick formation, maybe head and shoulder, or you want to use M formation, or you want to use inverted M formation, that is W, or you want to use cup and handle, or you want to use cup and handle, or you want to use other patterns, other chart pattern like reversal patterns, is fine. Any other one wey you wan do, e dey fine, but then make you understand wetin be point of interest. So we don mention plenty things wey people dey use spot out point of interest. So for me, wetin me I dey use spot out point of interest, because now we don define point of interest as that very point on your chart wey market go react to if price move into that zone as point of interest. So just know that. So if you know say if market move into this zone, e go react. If you know say if the price move into this zone, say e go react, something go happen. There will be too much activities, buy and sells, liquidity go happen, this and that. So this place becomes your point of interest. So you begin to monitor that place. So anywhere on the chart, but there are different things where people dey use spot out point of interest wey we don mention. We don mention a few wey be order block. We also mention fair value gap. We also mention liquidity. We also mention chart pattern, maybe cup and handle. We mention another one too wey be M formation. This is double top. We also get triple top where the chart go dey like this, wey go form like this. We get double bottom where W pattern wey something wey go look like this. We have other patterns. We have the ones wey be triangles. So if you believe say if price move into a certain area, if you believe say if price move here, there will be a reversal or there will be a trend continuation, then that becomes your area of interest. So now if me I rule out, since me I put this line now, me I believe say if Bitcoin move into this price, this price area, if price move into this area, I believe say either Bitcoin go bounce back, go up, or e go drop, come down. So this area now becomes my own area of interest. Now, how do we spot out this point of interest to make it very easier for you? And at what point do you know that this point of interest wey you dey consider don dey invalidated? I dey on Bitcoin chart, and let's look at this thing. How to know if this point is still valid or not valid? Let me clear this chart first. Make I clear everything wey dey on this chart. Now you can see now that this chart now is very clean, nothing dey on top. And dey feel like say some of you go dey wonder why I dey always use phone to analyze. I dey use phone to analyze so that make you know say no be person wey dey use laptop, or no be person wey dey use that big screen na dey make you dey profitable. No, that big screen no be wetin go make you dey profitable. Wetin go make you dey profitable na when you make this thing very simple for yourself, very simple, and you can follow a certain strategy, trading plan and rules wey dey govern your trading, na wetin go make your trading successful. And me, I dey here to let you know say to trade no hard. We go make this thing very simple for you. So now this is Bitcoin. On this Bitcoin chart now, you can see that Bitcoin dey drop. And the first thing wey I go see on this chart, I first see a trend line wey dey like this. If I wan draw a trend line, I go get a trend line like this, indicating that the price of Bitcoin dey go down. Indicating say the price of Bitcoin dey go down. Let me draw this thing up for you very well. So you observe that you go see say Bitcoin is going down. So you fit see how Bitcoin dey react to this very trend line. Anytime that Bitcoin come to this line, you see how e dey react to it. E dey touch the line, e go drop. E dey touch. See, na the third time wey dey touch the line be this. Oh, see the first time e touch. See the first touch. See the first touch. Bitcoin touch here, e drop. E touch here, e drop. E touch here, e drop. This one did not touch. E touch here too. Bitcoin don dey drop. So now, this trend line, you can consider this trend line now as your own point of interest. Make you no dey confuse yourself. Many person say make you go mark out your point of interest. No confusion. Na something wey dey very simple. Na something wey dey very simple. Now, why you go draw trend line for your chart? You go draw trend line for your chart so that you know the direction of the price, so that you know where price dey move go, the direction of the market, and where this thing dey go, so that you know where to wait for am. So like now, Bitcoin is dropping, and wetin me I dey use do, wetin I dey use take out my point of interest na liquidity. I dey use liquidity. So if I dey use liquidity, wetin be liquidity? A point of liquidity is that region wey dey on your chart wey you don observe say there is active trades wey never dey valid. Either people don set orders put for there wey never dey valid, or people set stop losses put for there. Na that place wey dey call liquidity for your chart. So if you go and read liquidity now, they go dey confuse you. So if you feel like say this area now, say so many people don set entry and stop loss for this area, maybe they set order, maybe buy order and stop loss for this zone, then they are expecting price waka enter this zone before anything will happen. Then that becomes your liquidity. That becomes your area of liquidity. Now the place where you dey expect say there is too many order wey never fill. So people don put buy stop, sell stop, stop loss, limit orders. So that area where you feel say they don dey put limit orders, limit stop, sell stop, buy stop, or they don set even trailing stop. That area where you feel say the price never take out all those orders, that is liquidity. No confuse yourself with that. So we don't explain liquidity now. And we also know what we call demand and supply. We have what we call demand and supply. Demand and supply, you can also use it as your point of interest. Demand and supply. Now that zone. Demand and supply. Now that zone on your chart. Demand and supply is that zone on your chart where they don't get plenty activities. So when the market, let's say market move into this area. Let's say market move into this area on your chart. Market move into this area on your chart. Into this zone. So this zone now, when market move into this zone, you can't see too many active traders. So many active trading, buying and selling, can they go on for that zone? Plenty things can they go on, plenty things can they work out for there. So that very zone now becomes your demand and supply area. So if the zone they above the current price, if the place they above the current price or the current market movement, then you will call it, if it is above current price, you call it supply. If the place they, then if that place where you get active trading, if it dey below the price, then you call it demand. I hope una dey understand wetin I dey talk. You call it demand. So now wetin be the difference between demand and supply be that. Now that area where you when price been dey that area, if the thing been dey very active, you been get active trade, people dey trade, dey buy and sell, so many things dey go on. So that area now be your demand and supply. So if that zone is above the chart, is supply. So let's say right now, let's say this is the price of BTC. Now the current price of BTC be this point. Now if you see say plenty activities been go on this place when BTC been move and when price been there here, so many things be happen for here becomes your supply. So if you also observe say so many things been happen for here when BTC been there, here becomes your demand. So when price move into this area now, you go also expect say all those small waka, those small entries, or those small price action, buys and sells will still happen. So that is demand and supply. We go take time explain each of these things in our subsequent videos, but for today we did map out what is point of interest. So I believe say with this explanation now, you don't know wetin be point of interest. So point of interest now, that area, that particular portion or that zone on your chart where you dey expect say price go get reaction, either e go pull back or e go continue. So that very area is what we call point of interest. So I don't also give you example on the chart. If you are expecting say if BTC come to this place, say something go happen, the price go either move up or break down, that becomes your point of interest. If you mark out this other place and feel like say if BTC come out to this place, price go react, buys and sells, that becomes your point of interest. Likewise to this and likewise to this. So every point on your chart where you dey feel say there will be activity, you are expecting an activity, you are expecting either reversal or continuation, that is your point of interest on the chart. So don't get confused. So anytime you hear person they say point of interest, no say that person now don't see that, don't mark at that point on the chart to know that if price come here, so many kurukere waka go dey happen, so many buys and sells, so many price action, reversals or continuation, something go happen. So you dey expect make something happen for that area. So you consider that area as your point of interest. Okay guys, that is all about point of interest for today. See you in our next video. If you like our video or you are okay with our analysis and the way we dey take explain to make this thing very simple for you, click and share, comment, and also follow this channel, follow our YouTube channel, so that you go get notification when we drop another video. So for today, I hope my people understand wetin be point of interest. If you get any question where you no understand in wetin they call point of interest, drop your comment below. We go reply to you. Thank you and see you in the next video.